Nobody wants to lend this country money anymore. They're too indebted. They have no way to pay it back. The only way out is to print more money, and you're losing in real terms. Yes, they'll be able to print enough dollars to give you whatever the interest is on your loan to the US government. But those dollars, by the time you get it back, won't get you anything. It won't get you any eggs. It won't get you any gas. It won't get you any housing. In real terms, like what it can purchase you, it will inflate. The dollar will inflate more than they're willing to pay you. Okay. Negative real rates is what we've been talking about on the show. What negative real rates means is if inflation is 5% and US government's paying you 3%, you're actually losing 2% by lending to them. Yes, you're getting 3% interest on your dollars, but your dollars are losing 5% of its value. Does that make sense?
The financial system is rigged, and the house always wins. Picture this. America's staggering $36 trillion debt has reached a breaking point where even lenders are backing away. The only solution? Print more money, the economic equivalent of putting a Band-Aid on a bullet wound. Your dollars are being hollowed out before your eyes, with 5% inflation silently devouring those safe 3% treasury yields. This isn't investing, it's slow-motion financial suicide. Jack Mallers, the firebrand CEO of Strike, declares the game is up. When a country can't pay its debts and resorts to printing its way out, your savings become collateral damage. But there's a way out. Bitcoin's digital gold stands unshakable while the dollar burns. With its hard-capped supply and borderless design, Bitcoin isn't just outperforming the system, it's rewriting the rules entirely. As central banks worldwide drown in their own money printing, a growing army of investors is switching teams. The dollar's days as king are numbered. The question is, will you watch from the sidelines, or claim your seat in the new financial revolution? This isn't just market movement, it's the greatest wealth transfer of our lifetime. Place your bets. Let's watch clips from Jack Mallers' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
The first screen here, what we're looking at is what's called the MOVE Index. The MOVE Index is like the VIX for bond markets. It's supposed to measure bond volatility. So when the MOVE Index is very high, that cites a lot of volatility in the bond market. When the MOVE Index is low, it signals a lot of stability in the bond market. So what we're looking at here on the far left, you can see we're going all the way back to the 1990s. And on the far right, we're going to as recent as today. The tweet says, panic update. MOVE Index live is now at 172, a level only touched in October of 1998, the LTCM collapse, September of 2008, the Lehman Brothers collapse, March 2023, the Silicon Valley Bank collapse, and just to note, March 2020, the peak of COVID, the MOVE Index was only at 164. So a live move of the MOVE Index to 172 is astronomically high. And the visual here on the left, you can see the spike in 1998, which the tweet is referencing, LTCM collapse. You can see how massive the MOVE Index was in 2008 during the global financial crisis. And then you can see Silicon Valley Bank here in 2023. And the bond market started to fall apart in post-tariffs. And so what I think, my point to my listeners and what we've been talking about through the podcast, but what I really want to convey to you guys again and just reiterate is that what Trump and this administration did is they tried their whole platform, their whole agenda is to realign global trade, the geopolitical economic relationships between the world. Since the world wars, the U.S. has been running an account deficit. We've taken on the responsibility of being the world reserve currency issuer, meaning we export the dollar, we import real stuff. We operate our global trade in a deficit. Countries like China do the reverse. They operate in a surplus. They import the dollar, they export real stuff. They're a manufacturer, they're a producer of the goods and services. Russia as well. Russia is the largest commodity producer in the world. And that's been the global relationship that the world has had for quite some time. What that has done to the US is it's hollowed out our manufacturing base and it's destroyed the middle class. It's created the greatest wealth gap in the history of this country, where if you own financial assets, if you have the nice house on the beach, if you have the big stocks in the stock market, then those assets get bid up as the dollar continues to get debased, get printed, and foreign surplus gets reinvested into the United States. If you're living paycheck to paycheck, if you took out debt to get a college degree, if you're living on a house mortgage, if you're financing a car, you're getting consistently poorer because you're not an owner of assets. Those assets aren't getting inflated as the dollar is getting debased, and you are losing out in real terms. Your eggs are getting more expensive. Your energy bill is getting more expensive. Housing is getting more expensive. Cars are getting more expensive. Gas is getting more expensive. Everything in your life is getting more expensive. It's destroyed and removed any sense of the middle class. The lower class has just gotten bigger and bigger and bigger and bigger because it's harder and harder and harder to acquire the assets needed to stay alive. And the richer have only gotten richer without having to do any work. So Trump's entire agenda and his entire policy is, let's bring back manufacturing. Let's bring back producing our own stuff. Let's remove the account deficit. Let's not operate in a negative. Let's not just export a currency and import real stuff. Let's make real stuff of our own. America is very naturally rich. You guys should know that. We have all the materials on our own soil to produce our own food, to produce our own oil, to produce our own energy. We just don't. We just don't. To be totally honest with you, America has turned into, we're very spoiled. We haven't been required to put in the proof of work. We've been able to just print a piece of paper. And so that's the context of Trump's agenda. And whether you think it's a good idea or not, this is not a political podcast, and I'm not siding with anyone. I'm just letting you know his goal and his agenda is very clear. He's never changed it. Even he's never reneged on it. This has been his agenda all the way back to his first presidential candidacy and administration. Is I'm going to bring back the middle class. I'm going to stand up for the poor American, the farmers, the old industrial manufacturers, people that want hardworking labor jobs, people that don't own the stock market, people that don't own assets, people that don't live in Manhattan. I'm going to stand up for Main Street, not Wall Street. I'm going to bring back production into this country. We're going to realign global trade. I'm going to stand up and negotiate with everyone else around the world. And we're going to remove the account deficit that we run as a country. So tariffs was his weapon of choice. Okay. Tariffs was his weapon of choice, which is fine. It doesn't really matter. And again, it doesn't really matter whether you agree or disagree with these things. You know, financial markets, it's not subjective, it's objective. In my opinion, what this administration was trying to do is test how levered is the existing financial market. How much can they push things like tariffs? Can they push things like negotiating with other countries? How much can they starve markets of liquidity? How much can they challenge countries like China before the financial market went kapoof and collapsed on itself? And they couldn't even get through 1 week. They couldn't even get through 1 week. That's the entire point that I want to make, is they went hardball. They went as big and hard as they possibly could. They won the Senate, Congress, they like a Republican, red wave, everything. They went full blown maximalist position on tariffs, and they reverted and changed their position in a week. And we're getting validation from that. We've been talking about that on this podcast, and that's what my rant is today. And I have evidence that the entire financial market went kapoof with this MOVE index. The reason I want to show you guys the MOVE index is it literally shows you when financial markets go kapoof. So as soon as the bond market experienced such extreme levels of volatility, we saw immediate action, immediate reversion. So first we saw Trump pause his plans to hike US tariffs on most countries except China. First, Trump said, whoa. Sorry, I didn't mean to send the MOVE index to 172. I didn't mean to basically rug everybody in the global financial system. Okay, guys, the Treasury, U.S. Treasuries is the reserve asset of the world. The dollar's the reserve currency. The reserve asset is where you store your time, your energy, your capital. If you have a balance sheet, whether you're a central bank, whether you're a country, whether you're a company, you know, like Warren Buffett, I think owns like 5% of US Treasuries in the world. It's been the world reserve asset, not currency, asset. Okay. And so when the bond market gets so volatile where it's on the brink of collapse, all of a sudden, that's when they kicked in. And I'm going to go through exactly who was selling and why and who actually owns these things. So first, Trump says, okay, sorry, never mind. I take it back, except for China, right? Except for China. Then we go to the next tab. The Federal Reserve stepped in and said, we absolutely are ready to help stabilize markets if needed. I showed you guys this article before, but you have the president of the United States that says, just kidding. Then you have the central bank of the US dollar step in and say, we are here. We will print the money if financial markets need us.
The MOVE Index, Wall Street's fear gauge for bonds, just flashed its highest reading since the 2008 crisis, signaling market chaos. This eruption followed Trump's aggressive tariff rollout, designed to reshape global trade. But within days, the administration backtracked as Treasury markets neared collapse, forcing the Fed to promise emergency support. The takeaway? The system is dangerously fragile, abandoning reform at the first sign of stress. For Bitcoiners, it's proof. When real change threatens the status quo, money printing always wins. The house remains rigged. The U.S. Treasury market is in turmoil as traditional buyers flee. China, Japan, and even Canada are dumping bonds. So, who's keeping America afloat? Hedge funds in tax havens and Tether. That's right. The crypto stablecoin issuer is now the 7th largest Treasury buyer globally. With Treasury Secretary Besson hinting at emergency buybacks, this desperate scramble reveals the system's fatal flaw. As fiat liquidity floods markets again, history says one asset will rocket. Hint, it's not dollars. The great monetary reckoning is here. Let's watch more clips from the interview.
Now, I encourage all my listeners to watch this interview that Scott Besson, Treasury of the Secretary, did with Bloomberg. It's only a 20-minute interview, but he states in very plain English that he has the tools needed to support the bond market. He will support what he calls Treasury buybacks and make sure that this market can sustain itself, that there will be buyers of U.S. debt. That is the thing that they have to solve for, is nobody wants to lend any more money to a country that's in $36 trillion of debt and has no way to pay it back. Nobody wants to get paid interest in dollars. This was in March when it was published that Tether was the 7th largest buyer of U.S. Treasuries in 2024, compared to other countries. Okay, let's talk about what this means and what we can extract from this information. So for those listening, number one is the Cayman Islands at over 100 billion. Number 2 is France. Number 3 is Luxembourg. Number 4 is Belgium. Number 5 is Singapore. Number 6 is the UK, and 7th is Tether, notably larger than Canada, Taiwan, Mexico, Norway, Hong Kong, et cetera, India, blah, 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 blah. You can see on the far right, many countries have turned negative. That's the first insight. China, extremely negative. What does that mean? They are selling more treasuries than they're buying. Japan, negative. Brazil, negative. Ireland, negative. India, negative. So you guys have to understand, nobody wants to hold these dog shit treasuries. Nobody wants to hold these things. Okay. So you're starting to see massive unwind. Okay. When you see a market like gold going up and treasuries going down, that's not a coincidence. What is up for grabs is the world reserve asset. That is what's notably up for grabs. You're seeing an unwind from you using U.S. debt to store your time, energy, effort, and labor. And there is an up for grabs, open free market competition from where you store your balance, where you store your capital, where you store your assets, where you store your time and energy. Okay. So you can see these massive countries on the right unwinding. They're negative. So the biggest thing to take away from this is that hedge funds are the biggest buyers of treasuries. Hedge funds and Tether. I'm going to say this again. The biggest purchasers of U.S. debt right now are hedge funds in the Cayman Islands and Tether. That should blow your mind. When we do global trade, we operate in this giant deficit. We export dollars, we import real stuff. In countries like China, countries like Russia are producing. They're producing my iPhone. They're producing this hat. They're producing the energy, the oil that drives my Uber ride from here to the basketball gym. Okay. These countries are not investing in US debt anymore. They're selling it. The only people investing in US debt are stable coins and hedge funds. Hedge funds are running massive basis trades. Okay. Is this all making sense? So when I go and show you guys this, okay, the volatility spiking so high, what's actually happening is all of these hedge funds are puking their treasuries. Okay. What we're seeing is this giant unwind. Where's the volatility come from? Who's selling and dumping all this US debt? Who's selling and dumping all this US debt is all of these hedge funds in the Cayman Islands. I don't think people necessarily appreciate who owns the US debt right now. It is not like China hasn't bought US debt in large quantity since 2014. So the US government has to find buyers of its debt. Who's going to finance the government and allow it to keep, spending ungodly amounts of money in an uneconomical way? That's the main question. And this was fascinating. So this idea that the Treasury is trying to find liquidity and support financial markets. Okay, that's not a new concept. This is a chart from when Janet Yellen was Treasury Secretary. Okay. In the white, what you're looking at is the reverse repo market. Okay. In the gold, in yellow, you're looking at Bitcoin. What this tells you as the reverse repo market was getting drained. So basically, a long story short, when Janet Yellen was the Treasury Secretary, she had similar. The game is, where are buyers of US debt? Where are buyers of US debt? How can we finance the United States continuing to spend ungodly amounts of money unprofitably? If you're not producing a surplus, if you're not producing a profit, you have to get someone to lend you money, right? You're running on debt, right? The United States is not running on a profit, right? They're not producing more value for the world than they're consuming. You have to find someone that's willing to borrow or lend you the money. So what Janet Yellen did is use what's called the reverse repo facility to do that. So you can look at this white line as it came down. It's coming down because money is leaving this facility and entering the financial system. And what you can see is a direct inverse correlation is as this thing got drained, Bitcoin went up. Okay. As it got drained, Bitcoin went up. And this, now we're looking at historical data. This is not what's happening now. We're looking historically. But what we're looking at is a direct reaction to more fiat liquidity. Okay. Historically, when there's been more fiat liquidity, this specific example was the reverse repo facility tapped by, at the time, Treasury Secretary Janet Yellen. But what we're looking at is when Bitcoin smells and sees fiat liquidity, so a reverse repo being drained and dollars rapidly entering the financial system, it reacts promptly. So when we see interviews like this from Treasury Secretary Scott Bessent, and he sits down, legs crossed, hands crossed, like, look at that guy. And he says, listen, I have what it takes to support this debt market. I got it. I will find the liquidity. I will engineer Treasury buybacks. We will change the rules on US banks so that they can buy unlimited amounts of US debt. Last time something like that happened was with Janet Yellen, and we saw this. Now, we'll have to wait and see what happens. It's very unclear, but that's where we stand today.
Bitcoin's surge to $97,000 amid US-China trade tensions proves its role as the ultimate geopolitical hedge, a reality Jack Mallers has warned about for years. As Washington and Beijing clash over tariffs, investors are ditching fragile traditional markets for Bitcoin's predictable scarcity. The catalyst? MicroStrategy's $21 billion bet, China's sudden openness to negotiations, and the glaring instability of a debt-soaked financial system where Tether, a stablecoin, is now a top 7 buyer of US treasuries. This isn't just a rally, it's a referendum on failing monetary systems. While the US strong-arms banks into propping up its $36 trillion debt, Bitcoin operates beyond political whims. Maller's core thesis rings truer than ever. When nations weaponize currencies, Bitcoin wins. China's demand for lower tariffs exposes the dollar's vulnerability. If the Fed cuts rates to ease tensions, inflation will rocket, making Bitcoin's hard cap even more attractive. The math is simple. With hedge funds and crypto companies, now the last buyers of US debt, the system's cracks are undeniable. Bitcoin, immune to money printing and trade wars, is becoming the safe haven for those who see what's coming. This isn't speculation, it's survival logic. As Mallers would say, you can't sanction math. And with every tariff threat or debt crisis, more capital floods into the one asset no government can control. The $100,000 breakout isn't a target, it's the starting line. As we wrap up, is the US debt crisis inevitable, or can the Fed keep printing forever? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.